Hi, my name is Shafiq. I am a CPA. This video is about tax deductions and tax credits. Before I start, this video is only for information purposes. Please do not take it as a legal advice. Tax deductions and tax credits come to play when you file your personal taxes. So what is the purpose of, or what is the benefit of tax credits and tax deductions? So they both help you pay less taxes, but in a different way. So the tax deductions are ones that reduce your taxable income. Taxable income is income on which you have to pay income tax on. Now, let's say, for example, you have $50,000 income. Now you can deduct student loan interest. You can deduct your traditional IRA contributions, the one that you established by yourself, not one from your employer, because that is taken care of in your W-2. Depending on if you file single, married, filing jointly, or head of household, you get standard deduction. Like for single person, in 2021 it was $12,550. For married people filing together, filing jointly, it was $25,100. And if you were head of the household, then I believe it was $18,800. That's how deductions work. So for example, your income was $50,000 and you had student loan interest, you could deduct that up to $2,500. Then if you contributed to your traditional IRA, you could deduct, let's say, $5,000, $6,000, whatever amount you contributed. I believe the limit was $6,000. And if you are over 50, you could contribute a little more. And then if you filed as single, you could deduct $12,550. And let's say, for example, it brought down to $20,000, your taxable income. So even though you earned $50,000, you will have to pay tax on $20,000 after your deductions. Now, what are the credits? Credits are that they reduce your amount of tax that you owe. Sometimes you even end up getting a refund. But so the big difference, tax deductions reduce your taxable income, the amount on which you have to pay tax on. Credits reduce the amount of tax you owe. So credits have two categories: refundable and non-refundable. So some credits, such as American Opportunity Tax Credit, which is an education credit, part of it is refundable, part of it is not refundable. Child tax credit, earned income tax credit. Earned income tax credit is a refundable credit. So refundable credit means that if you don't owe anything, you can get that credit back in the form of a refund. Now, to get these credits and deductions, you have to qualify for it based on your income, your filing status. So these things come into play. How much income did you make? Let's say, for example, student loan interest deduction is, I think, maximum you can take $2,500, but based on your income, you might not be able to get full $2,500. First of all, you had to pay $2,500 or more to get full deduction of $2,500. If you only paid $1,200, then if you qualify, you will only get deduction for $1,200. Same thing for the IRA deductions. If you contributed $5,000, you are going to get $5,000 deduction, not $6,000. Now, when we come to credits, you have a child tax credit. So you do have to have a qualifying child based on the age, and if the child lived with you more than half of the year, earned income tax credit. Now, earned income tax credit is credit if you earned income. That's the first thing. The second is, depending on how many children you have, dependent children, how much income you had, so how much investment income you had. So all these things come to play. So in other words, and I will explain why I'm making this video actually. So the deductions and credits are there for taxpayers to help them reduce their taxes. But the taxpayers have to qualify to be able to take advantage of these credits and deductions. So why did I make this video? So I had a client, she came in last year, this year actually, to file the last year tax, and I believe it was the last day, and I was not able to, we were not taking clients that time, but she was referred to me by a very good friend of mine. So, I did it. Now, during the normal process of interview, I've been doing it for many years, so I determined that she is single because it was very simple. Are you single? Are you married? No, I am single. So we filed as single, and she claimed American Opportunity Tax Credit for the education, and she was getting some refund. Now, when I filed her tax, e-filed, electronically filed it, so it got rejected because her name was already used in another tax return. So as a dependent or spouse or some reason. So it means her filing status was not correct. So when I asked her, and she said, no, her divorce is not final yet. So she was living separately from her husband, so she thought she's single. So when we changed her filing status to married filing separately, she could not qualify for American Opportunity Tax Credit. So her filing status disqualified her from getting American Opportunity Tax Credit. So that's the whole purpose of this video, that because what happens is during the tax time, like the credits are available, deductions are available. It's just like you go to a pharmacy, there are so many medications there. They are for patients. Same thing, the tax credits and deductions are for taxpayers to take advantage of, just like medications are for patients to get benefit from the medication. But just like medication, you need to have it, you need to have a prescription. I mean, you need to kind of qualify to get that medication. Same thing, to get benefit of your deductions and credits, you have to qualify for it. You do not automatically get it. And that's one of the main issue we have during the tax season, that people listen to radios, watch news, and they only listen, they only hear it that you can get American Opportunity Tax Credit. But first of all, you have to have qualified expenses. You have to have a form 1098-T from your college that shows that you paid the fee, the qualified expenses. Same thing, for you to get benefit of earned income tax credit, you have to have earned income. Then you have to have your income under certain limit. If you make 100,000 and you even have 3 children, you are not going to get earned income tax credit. So I hope this video helps. And the bottom line is, yes, there are deductions, there are credits, but a taxpayer needs to qualify to have benefit of these credits and deductions. So please like, share, subscribe, and give your comments, and I will see you in the next video. Thank you.